It's the beginning of March 2020 and interest rates have jumped up yet again, and we need to talk about it. How you doing? I'm Werenka from M1 Realty. I'm the broker owner of the company, founder of the company, and since 2014, we've grown M1 Realty into the largest real estate firm in Ferndale, Michigan. I run an all-star team of agents whose only job in life is to get you the absolute best service possible, whether you're looking to buy, sell, rent, or invest in real estate in the Detroit, Michigan area. And before we get into it, please make sure to like and subscribe to this channel, and please do me a favor and share this video to anybody that you think might be looking to buy a home anytime this year. It's going to be very, very informative for them. And make sure you watch this video all the way through, because at the end, I'm going to give you a scenario that I think is going to surprise you. Now, if you follow this channel, you remember that about 2 months ago, I did another video on interest rates because at that point in time, inventory was super historically low and mortgage rates had jumped all the way up into the low 4s. So fast forward to the beginning of March 2020, and in just that short period of time, interest rates have gone all the way up into the low 5%. So a 1% jump in interest rates doesn't seem like it would be a whole lot, but let me put this into perspective for you. Let's say, just for argument's sake, that you're looking to purchase a home and your mortgage amount is going to be $250,000. If your interest rate was 4.25%, then your principal and interest on your mortgage payment would be $938.88, and just the interest on that mortgage over the life of a 30-year loan would be right around $154,000. Now compare that with today. So interest rates have jumped up a point. So say your interest rate on a $250,000 mortgage is 5.25%. Your monthly payment is now going to be $1,104.41, and just the interest on that is going to be $197,500 over that 30-year mortgage. So just the fact that you waited 2 months to buy a house is going to cost you $165.53 per month on your mortgage, and over the life of that 30-year mortgage, that's going to cost you $43,388.79 in extra interest that you would not have had to pay otherwise. Now, I don't want this video to be all doom and gloom. There are some good signs on the horizon. Inventory is still, definitely lower than it was this time last year, but we're starting to see more inventory hit the market every single day. For example, just in the last 2 weeks, the level of inventory in Ferndale has more than doubled. And we're starting to see increases in inventory in the other cities that we track on a regular basis as well. So that means as we're heading into purchasing season traditionally in Michigan, that's the spring and summer and early fall, there should definitely be much more variety of homes to choose from and a lot more inventory. So you can have a little bit more time to just kind of decide which house you want, which is the right fit for you. You're not going to be under a huge amount of pressure just to put an offer in on any house that hits the market, because while we're going to see sustained demand, and I don't think inventory is going to be to our traditional levels. I think we're going to be lower than that probably for the foreseeable future. That still gives you a little bit more flexibility in terms of purchasing, and even though our purchasing power is a little bit diminished just due to rising interest rates, that's going to be a little bit mitigated by the fact that more competition from sellers should bring the prices down just a little bit. Now, with all that being said, I have a feeling, I don't have a crystal ball on me, and if I did, I'd give you the goods for sure, but I don't. I can only go off of my accumulated knowledge of almost 20 years in the real estate business, kind of being able to read the tea leaves a little bit and kind of getting a feel for where the market's headed. I think one thing that's going to be just like the name of the game for at least this next year in 2022 is going to be rising interest rates. From everything that I've seen, it appears that the Fed is definitely not done raising interest rates for the year for 2022, and mortgage rates tend to follow interest rates as they go up and down. It's not a one-to-one comparison, but definitely the Fed raising interest rates influences the rate of 30-year fixed mortgages and really every type of mortgage. There are a few things that are important to remember when you are shopping around for a reputable mortgage company and really starting to think about purchasing a home. Now, the first important thing is not to fall for teaser rates. A lot of times, if you're shopping around, going to certain websites or certain companies will advertise a mortgage rate that seems too good to be true, and generally it is. A lot of times what they're not disclosing in that initial rate is the fact that involves you paying points to buy your rate down. And when rates are only in the 5 to 6-7% range, it doesn't make a whole lot of sense to do that unless you plan on living in that home for at least the next 7 to 10 years, because otherwise you're kind of sacrificing flexibility and the ability to move quickly. It's just not going to be cost effective for you to do that. So for that reason, it's definitely in your best interest to do a lot of research in who you go through for a mortgage. Make sure you're working with a reputable lender, and most importantly, a loan officer who knows what they're doing, who has a good, strong track record of getting deals closed. In my opinion, and I've got, when I'm buying a home, I've got skin in the game, obviously. I care less about the interest rate. I'd rather make sure that I'm working with somebody who I know and trust and can get that deal done without a lot of stress and headache, and less about, paying 0.1% more on my interest rate. I mean, not that necessarily would be the case, but that's less of a factor for me personally than it is making sure that the deal actually closes, because if it doesn't, we run into an issue on the mortgage side and it just doesn't close. We got a lender who takes too long to get a deal closed, or we have a loan officer who is inexperienced and can't get the job done. Then the interest rate is really irrelevant at that point, simply because if you don't have a house, you don't have a payment, and the interest rate is a moot point at that point. Now, when it comes to working with a reputable local lender, we absolutely can point you in the right direction. We work with some of the best in the industry in this area and are happy to give those referrals anytime. We're just looking to help you guys out any way we can. So it's important to just partner up with somebody who is going to get the job done for you. And once you get that house under contract, my recommendation right now is to lock in your interest rate ASAP, because while interest rates fluctuate from day to day, sometimes they go up, sometimes they go down, the odds of your rate going up are a whole lot more than your rate going down at this point in time. So now that we can be pretty sure that we know what's on the horizon, that we can see rates, continuing to increase instead of decrease, let's talk about a scenario that, it's a possibility. I'm not going to say it's a probability, but I wouldn't be shocked if it happened. So, later this year, we could be talking as early as midsummer. The way that rates are going up right now, could be the end of the year. I'm hoping this isn't the case, but it's possible that we could see interest rates anywhere up to and including 7.25% if we're at 5 or 5.25 right now. Wouldn't shock me if by the end of the year we're at 7.25. That's just the way that things are trending right now. So let's talk about that for a second. So if that is the case and you're buying your house, at that point in time where your rate's 7.25%, on that same $250,000 house that we were just talking about, your principal and interest on that house is going to be $1,364.35 at 7.25, as opposed to the $1,104.41 that it would have been at 5.25, which is what you'd roughly be spending right now. And it's important to remember that's strictly principal and interest. So this doesn't factor in taxes and insurance. And depending on what city that you decide to live in, taxes are actually the number one factor that's going to influence your monthly payment, because some cities have a lot higher tax rate than others. So, you could be paying, who knows, on that $250,000 house. Some cities you might be paying, $3,000 or $4,000 a year in taxes. Some cities you might be paying $8,000. It could really impact your monthly payment one way or the other. And the same goes a little bit for insurance, depending on what city you live in. It's not going to have that much of an impact on your monthly payment. Between the principal, interest, tax, and insurance, the insurance is the smallest chunk of that monthly payment. So rates are higher in certain cities rather than others. The closer, if you're on a city that borders Detroit or in the city of Detroit, your insurance rate is going to be higher. That's the world we live in. It is what it is. So just be prepared for that. But to an extent, taxes are a big chunk of your monthly payment, and then interest rate is going to have a huge impact as well, obviously. So just speaking on interest for a minute, at that 7.25% interest rate that we could be paying in the future here in the next few months, that's going to add $259.94 to your monthly payment, simply in interest. So over the life of that 30-year mortgage, assuming that you don't pay down anything on the principal, you're just making your minimum payment every single month for 30 years, that 2% jump in interest rate is going to cost you an additional $93,500 over 30 years. Not chump change. So the moral of the story is, if you're thinking about, jumping into the real estate market and purchasing anytime this year, you're much better off doing it sooner rather than later, simply because for the reasons that we just outlined, it's going to cost you quite a bit more over the life of a mortgage and increase your mortgage payment as well, just on a month-to-month basis. So I really hope this was helpful. I know I just did one of these videos, but I felt that the rates had jumped up enough that it was important to kind of give an update on that and just let you know where we stand right now. And if rates fluctuate again, throughout the year, I'm gonna have to just keep coming back and doing these just to keep everybody informed. So yeah, again, I hope this helps you. And really appreciate you for watching. Thank you so much. And please, if you have any questions at all, just reach out to me anytime. You can call me 248-561-6155 or email me at dwerenka@m1realty.net. I'm always happy to answer any questions that you might have. And again, if you could, just like this video, subscribe to this channel for regular updates, and most importantly, please share this out with anybody that you know or think that is going to be buying a home this year. This is really important information, and it's crucial to them so that people know what they're getting into, before making the biggest purchase of their lives. And I just want to take one more second to thank everybody that's reached out to me so far on these videos and asked questions and had comments. Really appreciate it. I love talking to people just like you on any topic really that involves real estate in the state of Michigan and specifically in the Metro Detroit area. And I just look forward to continuing to make content that's really applicable to you guys and is informative and beneficial for you. So until next week, thanks for watching and have a great day. Thank you.